The secondaries business for us is a very natural extension of our core capabilities in private equity. I say that because we focus on the same sectors and themes in our secondary business that we do in our primary private equity business. And our expertise across the sectors in which we're focused gives us a particularly strong vantage point from which to underwrite these opportunities.
The single asset secondary market, of course, has evolved rapidly equally since it first came on the scene. Really around 2017, 2018, the first deals were transacted. The benefits of these transactions, from a general partner's perspective, from a sponsor's perspective, the ability to hold on to some of your best companies for longer. Where you have a company that is outperforming and you continue to own and manage that company and benefit from the upside, whilst at the same time providing liquidity for their investors that desire it. So you have a tremendous positive selection bias, accessing a slice of the best performing assets from across the private markets. They're lower risk. Why are they lower risk? Well, you're investing alongside the manager who already owns the company. And with that knowledge, they are deciding to put their own money back into the company. Which brings me on to the third benefit, which is some of the strongest alignment you'll see in the alternative space. GPs put more of their own money into these deals than you will see anywhere else across private equity. So from a buyer's perspective, you have the opportunity to generate buyout returns, but with a lower risk, positive selection bias, and strong alignment.
A built-for-purpose specialist that's backed by a PE firm to invest exclusively into the single asset continuation vehicle market really has two distinct benefits. The first is the opportunity to create a team specifically to invest in sort of this style of putting hundreds of millions of dollars into single companies. In our view, that really requires a team that has two different legacies. The first is people who are deeply experienced in the secondaries market and combining that group with individuals who have corresponding deep experience investing directly into companies and bringing those two skill sets together, operating as a single, functional, multi-purpose investment team. The second benefit from a PE-backed approach into this market is inherent in building that dedicated team directly on the chassis of a private equity firm. That private equity firm can deliver sector expertise, people, resources, networks, senior advisors, pipeline, knowledge of companies in a way that can create tremendous synergy into the secondaries market, which can be harnessed and expressed directly by the dedicated team.
In many cases, those leaders from the broader private equity platform have looked at the same companies that we're considering as a GP-led secondaries. And that is a tremendous competitive advantage. So it's a very natural extension of what we've done. And the GP-led secondaries business itself is quite compelling.
I'd say two things are going to happen with PE-backed firms coming into the secondaries market. The first is growth is going to accelerate. There is an excess supply of deals that are waiting to come to market that are going to be unlocked by specialist capital with specialist capability. Second thing that's going to happen is as new entrants come into the marketplace, they're going to capture share. They're going to grow into this part of the market with a level of success and penetration, which I think will displace many of the incumbent firms. So roll the clock forward 10 years, I think the competitive landscape is going to look very different. And in the single asset continuation vehicle segment of the market, the rise of built-for-purpose specialists are going to be a large and permanent fixture in the competitive landscape at that time.
There is no doubt in my mind that this market will continue to grow rapidly. There is growing acceptance of continuation vehicles both across the general partner community and across the LP community. As more successful transactions are exited, more capital will come into this market, and the biggest constraint on our market growth thus far has been lack of capital. It's been an undercapitalized market. So as more capital comes in, we believe more deal flow will also come through into the marketplace. So we are very bullish about the outlook in terms of deal volume across the GP-led market over the next 5 to 10 years.